China taking its fair share of the headlines today. And just a few moments ago, it came up at the Daily Journal shareholders meeting with Charlie Munger. You can stream this right now live at CNBC.com, by the way. It's going to go on for another hour or so. Munger said you can buy stronger, better companies at better valuation in China than in the U.S. He's repeated that in the past. And when asked about why he prefers Chinese automaker BYD over Tesla, he said BYD is so much further ahead of Tesla in China that it's, quote, almost ridiculous. BYD shares down about 1% today, up 22% year to date. Tesla, as we know, up more than 70% since Jan 1. Now, while Munger is bullish, recent 13F filings are showing more of a divergence of opinion among hedge fund managers on the likes of Alibaba and JD. By the way, Munger also mentioned on Alibaba he did use a little bit of leverage for that lately. And speaking of Tesla, it's hitting the brakes on production in China, looking to make way for an upgraded version of its Model 3 sedan. Billionaire investor Ray Dalio making waves at a conference in Dubai today, saying China is winning the trade war if you just take the numbers, the percentage of world trade and dominance. Here to make sense of it all is Brendan Ahern, KraneShares CIO. It's good to have you here, Brendan. Welcome. And Munger saying Chinese companies are still a better value. What do you think?
And Charlie, we trust that. Certainly, Mr. Munger has an incredible reputation, and I think what's important to recognize is, Charlie is the boss, and for many investors, they have to answer to their investment committees or their board of directors or end clients, and so changing one's position, getting involved in China might be difficult for some people, and that's why our belief has been the pain trade is higher. That Charlie Munger can do as he pleases. Other investors have to worry about political relationships and et cetera. Charlie can just get involved, and we think there's a lot more money on the sidelines still waiting to get involved on Chinese equities.
You think that even after the latest filings? Because some people, it looks like, are heading for the exits.
Well, I think you've seen a number of fast money, particularly hedge funds, have been very involved in the space. That hedge funds don't marry their positions. They want to make money, and they got involved in China very early. Caught, in the case of KWeb, our China internet, went up 96%. At the same time, there's a lot of data showing that long-only managers, actively managed funds, are still underweight China, even after this rally, Kelly. And I think that's why this correction can be bought by a lot of investors, particularly in light of knowing that you've got all this China consumption is going to be such a big story this year.
What is the valuation when you look at some of the leading internet names? How does that stack up?
I mean, think about this, Kelly. Alibaba is the #1 holding of MSCI emerging markets value. That it's not considered a growth stock. It's the #1 value. And so I think because of some of the political rhetoric, political tension, because of zero COVID, real estate concerns, a lot of investors kind of came out of Chinese equities. And as China's economy proves that it's coming back online over the course of this year, they're not going to want to buy PetroChina or ICBC Bank. They're going to want domestic consumption plays like Alibaba and JD and Pinduoduo and Tencent and others.
Is BYD in KWeb?
It's not in KWeb. It's been a long time hold. We actually launched the first EV ETF globally, cars, really based on our experience of what we saw back in June of 2017 when China recognized that it had a pollution problem. So we created a global EV ETF. So we've been an owner of BYD. Like Mr. Munger, who got involved back in 2009. I mean, it's just remarkable if you think about Buffett and Munger, their vision, as well as their patience and holding this stock. And the world, didn't really figure out what they figured out up until a few years ago.
Oh, sure. Everyone thinks they're dinosaurs who just own Coca-Cola. And it's like they got in on probably even a better trade. I mean, how familiar are you with BYD versus Tesla, Brendan? This is a hot debate among Tesla bulls trying to figure out what their fortunes will look like in China. How far ahead is BYD, do you think?
BYD is not selling thousands of cars or tens of thousands. They're selling hundreds of thousands of electric vehicles. And so certainly Tesla has its place. It's been a little bit of a luxury good, more expensive price point where BYD is creating really more for a broader mass market. So in many ways, I think Tesla has its place. We're believers in the company. At the same time, BYD, because of that mass market appeal, has a great opportunity. No different than, another player I mentioned, Kelly, CATL, which probably just got on the maps because of the Ford deal. But another, it just happens to be a Chinese company, but very, very important company, another big holding in our cars ETF.